Well, if I wait just a couple of minutes, my slide presentation will be over and I'll be able to step down. We already have a problem. If I had not been a CPA, I probably would have been a preacher. And as a preacher, I like to move around while I talk. And it looks like I'm going to be stuck here unless someone has a microphone. Now, let me tell you something. CPA. My ex-wife didn't think it stood for CPA, it stood for something else, certified pain. But anyway, this is the first Saturday that I've had off since January. All right. Let me tell you something. If you were to ask me where I would want to be, it's probably not here. But if the timber industry was not so important to us and to the state, I wouldn't be here. But that's how much you mean to me. Now, one other thing. You're probably asking, well, JMF's a big firm. They have plenty of people. Why are you speaking? The question was asked, we need a volunteer to speak the first Saturday we're off after tax season. All eyes go down. I made the mistake of looking up first, so here I am. But anyway, I'm happy to be here. Wayne, Lee, Billy, everybody's made me feel welcome. Before I forget, we do have some breakout sessions that Chris Williams is talking about record keeping. I sat in there with him, his first session, very informative. Unfortunately, I did not get to sit in on Kathy Rice and her estate planning, but she is one of the foremost in that field. So if you get a chance, I would advise you to go hear that. One other thing, I am way down on the totem pole when it comes to knowledge and expertise in timber, taxation, estate planning, gifting, whatever. But we have people who know anything and everything you could possibly want to know. You can always contact me. You can go to our website, www.jmf.com. Even call us at 345-8440. And if we don't know your answer, we will find an answer and get back with you. All right. I've only got 25 minutes and I've probably wasted more than I should have introducing myself, but timber taxation, very... Does that mean I'm through? Oh, okay. All right. Now, we work... Did I hit something? Okay. Well, I probably look better in the dark, so that's good. All right, just bear with me. We work with timber owners, foresters, timber managers, mills. We want to make sure that you pay your fair share. It's kind of like render unto Caesar what is Caesar's. But we don't want you to pay any more than you have to. Timber tax law is very complicated. And if you just don't understand what's going on, you need to have an accountant or a CPA who can advise you, because the smallest mistake can cost you a lot of money. Now, if you have someone that knows what he's doing, he can optimize your your tax situation and make sure you're getting all the deductions that you're able to. Basically, timber is into three categories. It can be a hobby, and I can look out here and I can tell we don't have any hobby timber owners out here. Or it can be investment property, or it can be business property. So let's look at investment property first. You're someone who owns timber, but you're not in the timber business. You just grow it, and you have casual sales, and you wonder, what's a casual sale? Or what is casual sales? That's 1 or 2 sales every 3 or 4 years. Now, you know, it's stringent, but it's meetable. Basis, very important. When you have a timber sale, you need to be able to tell me or whoever you use to do your taxes, you need to be able to not only tell us what your basis is, but you have to prove this is where I came up with my basis. The days of going into your accountant and saying, hey, I got this 1099-S for $50,000, I got $25,000 worth of basis. Those days are over. Treasury wants you to show them how much you paid for the property, broken out into land and timber, preferably, reforestation expenses, timber management expenses, but they want you to be able to see that you just didn't pull some number out of a hat. As long as you can produce some numbers, you stand a better fighting chance. Now, I talked about reforestation. The rules changed back in 2004. At one time, you had to capitalize reforestation expenses. Once you had to sell, well, and you would amortize them, once you had to sell, that's when you would get the benefit of the expense. Now, you can deduct $10,000 in 1 year. That's per, I think it's called Uniform Site Indicator. Each track needs to be its own separate track. You know, whether it's track 1, track 2, it's the Henson Farms, it's the Beaver Creek property. As long as you've got it separated and you can show that I spent $10,000 on track 1, I spent another $7,000 on track 2, then you can deduct $17,000. If not, you can expense the $10,000, but then you have to go back and amortize the other $7,000. Now, you will get it. It'll just take you 84 months to get the benefit of it. Now, am I still sliding just over and over and over, or are we at the end? Oh, it has stopped. As you can tell, I haven't been keeping up with it. So, let's just talk about, oh, we may be right where I need to be. That is not good.
Just the bottom one.
Okay.
Bottom left.
Oh, look there. You can't teach old dogs new tricks. Okay, first thing, and like I said, because of my limited time, I can't really go into depth on any of this. So instead of calling my topic timber topics of discussion, I should have just said timber topics for consideration, just to give you something to think about. All right, you've also, I've already mentioned the timber management expenses and the tax treatment for the timber sales. We've been lucky over the past few years that we get capital gains treatment on the timber sales. You know, this year we are still getting capital gains. If anyone in here knows what Congress is going to do, then you can get up here and help me finish this presentation. I don't know if we'll get to keep capital gains or not. So, you know, that's something to consider. I even had one person go ahead and do a sale last year because she wasn't sure that we'd even have capital gains this year. So, you know, it's kind of like 6 of one, half a dozen of another. You're almost playing the tax roulette. But capital gains is a good thing for us. Now, tornado came through here April 27th last year. Lots of trees down. Casualty losses. No telling how many returns we did this year with casualty losses on it. However, what some people think is, you know, I had $20,000 worth of trees blown down, but they didn't have any basis. If you don't have basis in your casualty trees, then you don't have a loss. We don't like it, and they sure didn't like it when they found out. All right, I've already talked about investment property a good bit. Record keeping. I've mentioned that once before. It's easy when someone dies and leaves you timber property, timberland, because you can get an appraisal that will tell you This is how much the bare land is worth, this is how much the timber is worth, and it'll even be broken down into pine, pulpwood, hardwood, pulpwood, ash, oak, chip and saw. We can take that information at the beginning, and it makes it a lot easier on you. We have a template at our firm where we actually grow the timber each year based on the soil index and the water index and what the foresters tell us they expect the growth rate to be, 3%, 4%, 2.5%, depending on where it's located. Treasury likes to see numbers and they like to see consistency. All right, I've already mentioned the 15% capital gain. We want to hold on to that. Now, and you're an investor if you just own the land and you plan on selling it for a gain down the road. Just make sure it's not a hobby. You do something more than just hunt on it because you can't deduct the expenses. And if you are just an investor, your management expenses are deducted on Schedule A. If you happen to be using the standard deduction, you would want to consider capitalizing any of the timber management expenses and using them later. And I've already mentioned the $10,000 in expense per year for reforestation and the 1 or 2 sales a year. All right, business property. Your intentions is to make a profit. You are in the tree growing business. That's what you do. You manage your timberland. You may or may not have people working for you, but every decision you make is based on a reasonable profit motive. That's what you want to do. You want to be a business in the timber business. What advantage does that give you? Your income is non-passive. Now, anybody who's not a CPA might think, well, what is non-passive income? Non-passive income can be used to offset ordinary income. If you're not in the business, then your timber income, or a lot better yet, your timber losses are going to be passive income, and they can only be used to offset passive income. Not many people have much passive income. All right, passive loss rules. You're either materially participative or you're a passive participant. We have a 7-prong test to determine if you're a material participant. You got to manage your property in what they call a regular, continuous, and substantial level. 2 of the 7 factors involve hours. If you spend 500 hours a year managing your timberland, then you are a material participant. You can't just come into my office and say, oh yeah, I worked well over 500 hours last year. You need to show documentation where you log your time. We need to see that you went in on Saturday, April 21st, and you did road work, bush hogging, whatever you treated. Keep up with every hour that you spend. 500 hours. Now, if you get lazy, you can make your spouse go work on your land, and those hours do count towards your 500. You may not be married afterwards, but you'll meet the 500-hour test. Now, a lot of people don't have spare time to spend 500 hours working their timber. There is a lesser hour requirement, 100 hours. But the key here is you got to make sure nobody else works more than you do, more than that 100 hours on your property. As long as you work the minimum 100 and nobody else works more than you, then you're still a material participant. All right, now, if you're not material, you're passive. And once again, your passive losses and your passive deductions, expenses, they're just limited to your passive income. And as I mentioned, please keep a record of the time that you put into managing your timberland. Can't stress that enough.